we adapt, we adopt, and we move on. And this is exactly what happened with 2 years of a pandemic. And we went from this to where we are now, completely open. This is coffee, being in front of everybody else. And in coffee, over the past 3 years, exactly to date, we have thrown everything possible that you can throw to coffee. Everything from war, pandemic, viruses, freeze, droughts, freight, fertilizer shocks. Coffee took everything, and we're still here because it is a resilient product. It's a product that everybody needs, wants, desires. But this situation was just not only to coffee. This basically happened to every single commodity. If you were in the agricultural, if you were in the energies, if you were in the metals, your whole world was turned upside down, just like in coffee. And obviously, prices of any product explodes or implodes to the changing market conditions. And we went from the initial drop of the pandemic, the surge of the reopenings of the markets. Then we got hit with a massive drought that we haven't seen in a long time in Brazil. Then we got hit with not one, not two, but 3 frosts in Brazil in 2021. And then again, we went into more rain delays, and guess what? Now we got hit with a war. And incredibly, the war took 25% of the price of the green coffee. And we'll go into details of why. And then we had the expected flowerings that collapsed prices. Why? Because we were expecting this massive crop, and all of a sudden, prices went right back up. So we'll look at this whole thing, and we'll look at it in the context of what's happened and what we can expect, and all the pitfalls that we're going to look in the way. What did the market collapse? All of a sudden, we got the flowerings. We got the rains that threw the flowerings. And the market was expecting this massive super crop. On top of that, with this flowering, the market, especially the buyers, were expecting that Brazil would come in with this bumper crop of expected crop increase. Consumption concerns also came into the picture at the same time. So we had expectations of big crops, and all of a sudden, consumption concerns, demand. And then, if it wasn't enough, let's throw the volatility of the US dollar and now a new concept that everybody has to deal with. Inflation and the other word, which is recession in a global scale. And because of that, prices collapsed 46%. From the very top after the droughts and freezes to the lows that we went to see about a month and a half ago. We look at this word, sustainability. And I'm going to put my 2 cents because I have seen this happening over the past 31 years. And we look at sustainability, and about a month ago, the Specialty Association of America put out an article in their magazine talking about sustainability, but asking this question. What is sustainability? Because we keep talking about it, but do we really know what it is? And I'd like to give you my view on the past 31 years. So we keep talking about sustainability. And to be honest with you, I don't want the producer to be sustainable. Right? I don't want the producer to just be sustainable. I want the producer to be profitable. I want the producer to be a capitalist. I want the producer to grow. I want the producer to be the same profit center as anywhere from the coffee shop anywhere in the world, all the way to the export and the whole thing. That's the only way we can do it. But every time that I see the word sustainability, this comes to mind. This is not what we want. Let's change the word. And obviously, many times when we talk about capitalism and the producer to be a capitalist, we could cross the line into political thinking. So let's change the word. Let's call it profitability rather than sustainability. That's where we have to go. But the big question, as in sustainability, how do we get there? How do we get to the point that this becomes a growing enterprise, a growing business center. Because we just can't go to our children and say, oh, you're going to grow coffee, but you're just going to be sustainable. No, we got to change this thing. But we have a fundamental flaw in the entire coffee industry. Are we going to compare it to other businesses? The question is, how do you achieve to arrive to this capitalist, to this growth, to this profit center? Look at this chart. This is coffee over the past 50 years. You see those big 5 peaks? That was only created by a frost or a drought. In other words, the only time that we're going to make money if it's a frost or a drought. And over the past 28 years, we didn't have any frost or any droughts, with the exception of that little peak that was a massive inflow of money into commodities on behalf of the investors, the funds, the speculators. But other than that, the only thing that we can expect is a freeze or a drought. I cannot run my business expecting some other country to have a disaster on their hands. And the problem with this, the problem not addressing this profitability, is that every time you hit one of those things, this is what happens. The market looks for new lows. And the reason is when you throw money at the price overnight because of a freeze or a drought, we go into massive overproduction in all the countries. Obviously, Brazil is the biggest country to jump on this trend. But this vicious cycle can only be changed if we change the way we address the whole industry as a whole. Over the past couple of years, the overriding factor in coffee prices has been the weather. And we have just finished this month 42 months of La Nina, the longest period of La Nina that we have on record. Every single agricultural commodity has gotten destroyed by this. Every single buyer of foodstuffs, of agricultural products has had to deal with this. So most of the companies that buy foodstuff, they just want tranquility in the weather. They want to go back to neutral and not have these two extremes of La Nina and El Nino. This is the chart that we make every 2-3 weeks. And we take the expectations of the forecasters, the weather forecasters, of what their belief is on this El Nino Southern Oscillation Index. Each one of these bars is 3 months. So the first one, it'll be April, May, January, February, March, March, April, May, June, and so forth. So we just got out of La Nina and we're going into a full neutral zone. But look back there. Second half, we go into another extreme, El Nino. So wherever we had droughts, we're going to have excess rains. And wherever we had excess rains, we're going to go into droughts. The whole thing's going to be thrown upside down. But, and you can't see it because it's covered by the chairs, but April, May, June, July, look at that. We go into 83% neutral. And you may say, well, that's good. We're going to go into neutrality. The way this chart looks good and tranquility for the agricultural markets is to have a third probability of La Nina, a third probability of La Nina, El Nino, La Nina, and third probability neutral. That way, nothing's going to shake us. But when we go into extremes, that's when we're going to have a problem with the weather and the problem with our production. The problem of going into 83% neutral and those months is the winter months in Brazil. And the thing with the winter months in Brazil, the polar air masses collide with the tropical fronts coming from the north. But the difference is that the guiding currents shift. So now we have the subtropical currents moving upwards, and we have the polar currents pushing it upwards. You see that jagged line? That's the coffee belt. In the middle of the situation of this colliding fronts. So what happens with a neutral, since we think that neutral is going to be good, but neutral is good as long as it stays below 35%. But once it goes into 80%, we have an increased probability for frost. Now, I said increased probabilities. I didn't say it's going to frost, okay? I didn't say it's going to freeze. It's just that your probabilities increase. What does that mean for the rest of us? That means that we're going to have a lot of volatility. You saw the volatility today in the coffee prices. This is going to get worse as we go into April and May. We have got another problem. We've got the Russia-Ukraine crisis. What does this mean for coffee? What are these two countries going at war with each other? What does it do to your coffee supply, to your coffee prices? This is the Russian ruble. When the invasion happened, the market just exploded. In other words, the ruble devaluated by 100%. And then all of a sudden it got corrected. And it seems like it's stronger than it was before. That correction was all artificially driven by the government of Russia. Nobody can trade the ruble. No banks will transfer ruble. You cannot do any forward fixations with the ruble. It's basically a non-existent currency except to look at the chart. The other thing that happened, because of the war, European natural gas in general, exploded. This is important because if you're a roaster, you need to buy this. And if you're a roaster in Europe, you just got decimated. The cost of your roasting fuel just went up by 15 times. Not 15%, 15 times. And then it collapses. What happens? This is the typical situation, similar to coffee. Then we throw a lot of money in the form of a price increase. New substitutes come out. And the change of production happens. When this happened, they just moved into another type of fuel. Instead of being natural gas, it became liquefied natural gas. And all of a sudden, the market was able to bring a new type of fuel, liquid, into the European theater, reconvert it into gas and fuel. And this gas came from the Middle East, this gas came from Northern Europe, this gas came from the Americas. And all of a sudden, we see that prices are about to go below the entire pandemic. And this is good because the roasters in Europe, not as much in the US and this side, were having a difficult time. Some of them had to shut down. The other thing that's happened, freights. Anybody in this room that had to ship coffee or have coffee brought in saw their shipping cost go up by 10 times. Because of the pandemic, because of the freight disruption, because of the whole supply chain situation. Again, when you throw prices sufficiently high, when you flood the market with high prices, you will get substitute. You will change the balances of supply and demand, and all of a sudden we have an overabundance of routes, overabundance of empty containers sitting in Asia, and now we're back to the levels of June of 2020. And with the excess supply of empty containers, we're looking that that level is going to go even lower, even prior to the pandemic. And this is good for a total inflation of everything that we buy. And another major impact that impacted everybody who's a producer here, fertilizer prices. See, Russia, Belarus, and China are responsible for 40% of the global fertilizer production. But again, throw enough price to a product, throw enough money in the form of a price, and you will see substitutes and everything rearrange itself. So from fertilizer going from $230 a ton to over $1,200 a ton, all of a sudden we got other producers. Now we have South Africa, we have Iran, we have Iraq, we have Morocco, we have Canada, we have the US, even Brazil bringing new products. And immediately the price collapses. Let's look beyond the chart. This collapse in fertilizer is good for mankind. It's good for humanity. Because back last year, in April, May, June, there was panic in the world because the world was not going to be able to produce enough food. And the one who would be the most affected are the one most needy in our global world. So the fact that this thing collapsed is the best thing that could happen for mankind. This is good. Bad for the producers, good for mankind. And we expect fertilizer prices to drop all the way to $300 a ton for nitrogen-based products. Especially, all of these changes will happen if the war comes to a halt. By either side, there will be a heavy sell-off of products that come out of Russia. Energies, fertilizers, and the metals. So what does this thing do for our coffee consumption? On coffee, look at the map. You've got two countries at war, Russia and Ukraine. Russia used to consume 4.1 million bags of coffee per year. Ukraine, a little over 1 million. So between these two, they consumed almost 5.4 million bags of coffee. This consumption is gone. We lost these two consumers. If we're coffee producers, we just lost 5.4 million bags. Obviously not all of it, but big one. Russia is pretty much on the brink of bankruptcy, and Ukraine is basically destroyed. If you take all the other countries surrounded Ukraine and Russia, you add another 4.9 million bags. Obviously, we didn't lose this. But when you have 10 million refugees flooding your neighbors, escaping death, the first thing on your mind is not that I have to consume coffee. So we have an area of consumption that encompasses about 10 million bags that has been affected. Not completely destroyed, just affected. So one of the things that we have to do as an industry together from the producer all the way to the coffee shops is to figure out if this happens, how do we maintain consumption? Consumption is the key here. Consumption is the key, but is promotion of consumption the key to that profitability? And we're not doing it. So we have today, and one of the things that we like to do is try to see beyond that horizon to see what are the three things, what are the three storms that could be coming in. The first one that we have to look at, it's what's happened over the past 2 years, which is producer defaults. And because the explosive move in prices, there was a lot of defaults on behalf of previously contracted fixations. This is a chart of internal coffee prices in Colombia and Brazil, the two biggest countries that have had this issue. And as the prices started breaking new all-time highs, well, what do? We sell. When there's a record price, then we have to sell. So many of the countries started doing what they call futures sales, forward sales, but not just this crop, next crop and the crop after that, 1, 2, 3 years future sales. The problem is that after they fixed these multi-year contracts, prices doubled. This was happened with all the defaults. It's basically, I sold, for example, Brazil at around $800 reais per bag. Prices went to 1,600. So there was a lot of defaults. Colombia, they fixed a lot, around 1,100,000 pesos per load. Prices went to 2.3. There was a lot of defaults. But something else is happening here in this whole situation. When a producer enters into a contract long-term to fix internal market prices as they were offered in Colombia and Brazil, that supply chain takes on 3 shorts. So that supply chain, that trade house or that exporter takes a triple short. So that triple short is comprised by selling a futures contract that the exporter has to abide by. They sell, and you can't see it, but that's differential. they have to sell a differential, the second equation, and they have to sell a foreign exchange contract. 3 shorts. If the price goes from 800 to 1500 and the producer does not deliver, that co-op, that exporter, or that importer takes 3 losses. And the losses have been multi-million-dollar losses. And this has created a huge pressure on the future for the producers, because now it becomes a spot market. Nobody's going to want to offer the producer a long-term contract knowing that there's this big risk. So now it's become spot. Bring me the coffee, let's wait, and I'll pay for it. So we lose that financial ability to go and look beyond the first or second year to do our cash management. Reduce long-term fixation, it comes to shorter-term fixations. And now if anybody, any producer wants to do a long-term fixation, that middleman is going to take a huge discount. Why? Risk premium. Second, and to me this is the most important, promoting consumption. We need to aggressively promote consumption in consumer countries, but equally so in our producing countries. COVID negatively hit us in consumption. The war continues to put more pressure in this consumption. And now we have inflation, we have recession, and now this week is another financial crisis. The banks are failing. So what we need to do, and you can't see it, but the word down there says urgency. This is not an amber alert. This is a red alert, because we are feeling the problems of demand. Colombian differential over the past few weeks have dropped from 85 to 35. This is a note that demand is having a problem. And since we're in the question of inflation, what does inflation do to coffee? So if there's inflation in a country, the countries, in order to stop inflation, they have to raise interest rates. We want to slow down the economy. But if we increase interest rates, the next thing that happens is that we raise the value of the dollar. If we raise the value of the dollar, well, guess what? That's bearish commodities. So we have this inverse relationship. So if all of this is happening, us as an industry, we need to fuel coffee consumption. We need to get it going. And we're probably going to expect further hikes in interest rates. Maybe not so after this week, because 3 major banks have collapsed. So maybe the Federal Reserve of the United States is going to say, you know what, let's hold off another month or so as not to create more panic. But if we're looking at inflation, we need to ask ourselves, can we continue to raise prices on coffee without a stop and expect that consumption is going to continue without a flaw? Are we not inelastic? We follow roasted coffee price inflation in different countries. This is the inflation in roasted coffee prices in Brazil, the second largest country of coffee consumption. So here we have, back in April, May, June, inflation was running average of 65% on that little can of coffee or bag of coffee that you buy at the supermarket. My cost just went up 65%. Am I not going to be concerned about my prices going up 65% without affecting, maybe I'll only have 2 cups instead of 3 cups per day? Definitely. And one of the things about inflation, if you look at that chart, any inflation, we see that the line is coming down. So we're saying, oh, inflation is coming down. No, inflation is not coming down. What's coming down is the rate of increase. Because we measure inflation, which back in November was 22%, 23%, but it's based on the previous year. So if the previous year went up 41% and now it's another 23%, inflation is not coming down. It's the rate of increase. Inflation is the most cruel tax on humanity, because we're not making more, but we have to spend a lot more. This is the accumulated coffee price inflation for the United States and for the European market. And look at the biggest, #1 consuming country of coffee, the United States, 27%. And look at Europe, 12%. Europe did not go up as much because they've had a lot more problem with the inflation, the general inflation. You can't see it here, but roasters have had to deal with freight increases of 300 to 500%. And as well, they had to deal with natural gas increases from 600 to 1,400%. Massive in the cost of roasting. And if you're looking at the whole inflation in the European countries, we're pushing over 10%. This is not sustainable. And what happens is that in order to bring that down, Economics 101 says that in order to slow down inflation, we have to get interest rates above the rate of inflation. And that could be tragic in the growth of economies. In other words, in order to stop inflation, we got to kill the economy. And that's tragic. This is the European consumption. And that's on the left-hand side, you'll see the inflation that we saw on the previous chart. But look at the annual change in coffee prices in the European area. This is big numbers. Can we continue to raise these prices without our consumption being affected? Because if our consumption will be affected, we need to get consumption going. We need to get this promotion going. And this is the question. Who is promoting consumption? And the question we have to ask, are we growing at the same level the population is growing? The yellow line is population growth. The other black line is the population growth in consumption. We've got a gap, and we've only gone to 2020 because after the pandemic, it has been impossible to get proper data. But look at the way it opens. And in this chart, we put up the main consuming countries, blue, and the main producing countries, yellow, the 10 primary producing countries. And we see that in the main consumption countries, with the exception of Brazil, the European Union, United States, and Japan, those are the numbers. Brazil, 6.6, the biggest. But look at the other 9 producing countries. This is a problem. This is detrimental. We are having really low numbers. And take a look, for example, Colombia, with 2.1 kilograms per capita. Colombia is consuming the same amount of coffee that they were consuming 25 years ago. Let me say that again. Colombia is consuming the same amount of coffee that they were consuming 25 years ago. Yet population has gone up from 38 million to 51 million. Did we lose consumption growth? Absolutely, big time. Look at Indonesia. Indonesia, 1 kilogram. And you say, well, you know, Indonesia, a small island, 275 million population. They only consume 3.5 million bags. Brazil has 214 million, yet they consume 23 million bags. If we get consumption in the producing countries moving, we're going to achieve that producer moves away from being sustainable to being profitability. And that's where we have to guide. Unfortunately, we cannot get together. And the question we have to ask, are we at the same level in promoting our products? As a global industry, not you producer, not you roasters, whatever. As an industry. And we need to ask even further, are we competing with our biggest competitor that has our ingredient, caffeine? Because we're getting destroyed by these guys. Are we at the same level? No, we don't see it. And that's where we have to change the view. U.S. coffee consumption. Pandemic, COVID. COVID hit us hard. Yes, you know, we shut down the streets, we shut down economy, we shut down the stores. We went from a population of 327 through a population of 333. We still are trying to get above the pandemic levels. Last week was the National Coffee Association. The overriding factor is demand is weak. Second largest coffee consumption. I'm not talking about Europe as a whole union. Brazil. Brazil is stumbling over the past 5 years. They seem to have stuck at that level. Incredibly so, they went from a population of 205 to a population of 214. We got to move this thing. We got to move this needle. And it gets more concerning over the past 4 months. The dark lines on this chart, the dark bars, the dark blue bars, that was last year's Brazil exports. The light blue lines is the last few months export. Look at Brazil over the past 4 months, what's happened to exports. Collapsed. December, down 18%. January, down 17%. February, down 34%. All right, so you may see a couple of ideas. Okay, maybe there's no coffee in Brazil. Okay, that's one. Or maybe there's a problem with demand. Well, prices have come off about 25 cents. Differentials are coming down. So maybe it's not that there's no coffee in Brazil. And if there's no coffee in Brazil and Brazil is shipping so much less coffee, you got to bring inventories down. Because if Brazil is exporting so much less coffee and there's no problems with consumption is still the same, well, we have to be eating stocks. And yesterday, stocks were only down 150,000 bags. If Brazil is exporting 1 million bags less, you got to drink the stocks. And unless those numbers start coming down, it confirms that we have a problem with demand and consumption. And as an industry, we need to attack this issue. Third problem with the industry. Credible, transparent, and reliable supply and demand numbers. Yeah, that's a lot to ask in what we're having in this coffee industry. Coffee historically has had horrific supply and demand numbers. We can't figure out how much we produce, how much we consume, much less what the stocks are. And that is a problem because all of you are subjected to the volatility that brings. And we all pay it in form of prices. Form of price increase if you're a roaster, form of price collapse if you're a producer. So we run a lot of numbers out of Brazil. And when we were running, we run this estimate of, what's the difference in Brazil between the high estimate and the low estimate every single year. And there's about 50 numbers that come out. So up until now, it was 10 to 14 million bags. And we said, okay, well, that's the norm, I guess. So I wasn't going to put this chart until our research team in Brazil came out with this number for this year. So the error in Brazil trying to estimate is 22 million bags. So that means from the high end of the estimates to the low end, there's a 22 million bag error. That's 34%. In other words, you're going to do a study, you're going to be wrong 34% of the time. You want volatility? This is volatility. Unfortunately, our industry, the international organizations, do not come forth. Have you ever asked how is consumption calculated? Because, we have thousands upon thousands of agronomers everywhere in the world trying to figure out how much we produce, and we still get it wrong. How do we calculate consumption? We don't have agronomers trying to figure out how many cups you've drank. So we use something called the disappearance formula. A standard mathematical equation that basically says, we'll take production, we'll take away the exports that were done, and we'll take away the stocks. Whatever's missing is consumption. But we don't know what production is globally. We have an idea, but we don't have a number. Exports, we do know because every country has export registries. And we absolutely do not know what stocks are. The European Coffee Federation eliminated a couple of ports because they said, we can't get adequate numbers, so we're just not going to publish it. That is a problem because if we have 2 out of 3 main numbers, we have consumption off. The 2 primary members putting out numbers, or the two most respected, is the ICO, the International Coffee Organization, and the United States Department of Agriculture. But what happens with the ICO? The ICO is only allowed to put out the estimate that a member country reports. So if you are Vietnam, you're going to throw low numbers on your production. If you're Brazil, you're really going to throw low numbers because it's the member government country. So if that happens, you're going to have production estimate anomalies. If that happens, because of the formula, you're going to have stock figure anomalies. And if that happens, the formula says that you're going to have consumption figure anomalies. And that's where the problem is. As they say, garbage in, garbage out. And then we have the USDA, which their production estimates are pretty close to the commercial interest. But then now, the consumption estimates may be off. And about 6-7 years ago, the USDA had to reduce their budgets. They just didn't have the budget, so we're not going to do our consumption estimates. So I have an idea. They'll come out and say, we'll use the ICO estimates. But guess what? The ICO estimates are wrong. So here we go again. We're recycling the problem. And who pays? All of us. Producer, the roaster, middleman, everybody, in the form of price volatility. And don't take my word of it. Just take the Brazilian government's entity, the Brazilian National Supply Company, CONAB. And they did a study, which they even called us. And these are the production estimates of the past 10, 12 years. They added them up. And then they compared them to the USDA, which is closer to the commercial interest. And then they said, oh, that's our difference. So then they came out saying, we're missing 98 million bags. Is Brazil missing 98 million bags? No. These are the problems. These are the problems that all of us here have to deal, because all of this reverts back into volatility and it kills our prices. So this is what we have to deal with. Just to give you a quick look at the stocks, the blue line is the stock to use ratio. So we've stuck for the better part of the past 7-8 years around the 22%, pretty much average. Except last year when we had a drought, we had a freeze, we dropped to 19, and we're expecting this year to go back up as the crops go back up. Total stocks in the world, 33 million, 0.8 is what they call exchange certified stocks. So coming to the conclusion of this presentation, one of the things we just finished about 3-4 weeks ago, our Brazil crop estimates. We run only crop estimates in Brazil, only because they're 40% of the world crop. After several trips, the preliminary observations for Brazil is they will not have that super crop that everybody was talking about. Everybody back in June, July was talking that Brazil was going to produce over 70 million bags of coffee, some as high as 76, 77 million bags. But the problem is, when the rain came, they did have a super flowering. It was a massive, the flowering for a super crop. But the problem is that the farms were still not in good shape. Did they not recuperate from 2 years of droughts, freezes, and then going into the flowering, we had a 3 period of very reduced rains. 3 days after the main flower, temperatures dropped to about 7 degrees Celsius. And what that did, it did not hold the flower. We had a super flower, but we did not have a super flower setting for that super crop. And that was good news, because the numbers that were expected were extremely high. And that's part of the reason that after the collapse, we went right back up. We still have a lot of leftover from complication, but over the past 3 months, we've had a lot of rain, setting the farms, again, getting ready for the harvest and getting ready for the flowering in September again. We still have a winter period to go. So our numbers for this harvest that we'll start picking in May is 40.7 million for Arabica and 21.6 for Robusta, conilons. Keep an eye on that conilon. Huge trades are being made in Brazil, in Espírito Santo, Rondônia, Bahia, in this conilon expansion. It will grow considerably. Now, looking forward for 2023, what are the variables that we have to watch? Global demand. We've got an issue here, and the industry needs to come together and attack this problem. Over the next couple of weeks, over the next couple of months, more numbers are going to come out. Exports, stocks, we need to start bringing stocks down. Because if Brazil continues to drop in exports, and we've had drop in exports in Colombia, we had drop in exports in certain countries in Central America, we need to get this demand going. So that's one of the variables. Anytime on this crop, depending with the final numbers, and we may have to move the numbers in April, May, June, depending on the yields, but right now, we take Brazil, we use it as the pivot point. Brazil above 58 million bags gives us an excess in supply and demand. So if Brazil is 60, well, we're going to have 2 million excess. If Brazil is 62, we're going to have 4. If we're going to have 63, well, it's going to be 5 million. So the pivot of all the 80 countries with Brazil at 58, that's your pivot. Anything above 58, just add. Anything below Brazil 58, subtract on the global axis. Global inflation. This week, we're going through some very tough financial crisis. We've just had the second largest bank failure in the history. Is this going to create a contagion? Watch for that. Because the problems that come with financial crisis is that I may lose my job and I may not continue to buy the amount of coffee I used to buy. Take that to the whole global world. The war. How much are we going to continue? How much more damage is it going to do? One thing I believe is that if the war comes to an end, for whatever side calling it quits first, the one thing that Russia has to do is they have to come to the market and sell. Energies, fertilizer, grains, and metals. If that happens, we are going to have a massive sell-off, particularly in the energy markets, and that affects every single commodity. Watch for that. But one thing is for certain. We are getting ready for the next 6 months to have extreme volatility, especially going into the winter months for Brazil. And especially mid-April or so, you're going to get the initial numbers of the production estimate on behalf of the United States Department of Agriculture for Brazil. So all of this is in play for the next 3 months, but 4, 5, and 6 months, we got the winter coming in. So for 2024, and probably you can't see it because it's being covered, if we don't have a frost in Brazil this winter, in June or July, and we go into September, October with decent rains and the flowering comes in on time, and no delays and no drought, Brazil next year will have another large crop, above the 62, 63 million bags. Too early to tell, but those are the things that traders are looking into. I invite you tomorrow. I'm going to be doing a workshop of how to hedge volatility. It's going to be the very basics of price risk management. How do I protect in this whole world of volatility with coffee prices? Coffee being one of the most volatile products in the world. And this is where we have to go. We have to go back to profitability. This is what we have to bring to the producer. And with that, I'd like to thank PRF, Producer Roaster Forum. I'd like to thank, more importantly, all of you for giving me this time.